Well, good morning, everyone. This is Connie Yoshimura and Lottie Michael and our weekly podcast. And today we're going to have a very interesting conversation about investors and investing. Who makes a good investor and what should we be investing in when we think about commercial real estate and we think about residential real estate? So my first thought always is about home ownership, but I have a little take on home ownership. In today's limited inventory, I really think you should just step in. And it may not be your dream home, but it's a necessity for you, I think, to make a real estate investment in your home. It's the only leveraged investment. I know Lottie can talk to you about other types of investments. And then, of course, there's the bond market and all equity stocks and all that sort of thing. But those are not leveraged investments. And home ownership, whether it's 0 down, 3%, 5%, VA, FHA, Fannie or Freddie, is really a leveraged investment because when you have appreciation, it's on the total value of your property and not as far as the amount that you've actually invested. And then the other thing that I would like to say to you is I always encourage first-time home buyers to buy a duplex and an owner-occupied duplex and not a single-family home. Because as your professional income grows, it's important that you have that opportunity to leverage yourself into a single-family home. A duplex, you can purchase a duplex as an owner-occupant, and you only have to occupy it for a year, and then you can go purchase your single-family home. So many young investors that I know do it absolutely backwards, and then they end up paying more for their second investment. And then, Lottie, I want to talk to you about, because I have had several investors in my residential land development company, and I have sort of a personal opinion about what makes a good investor and what doesn't make a good investor. So let's begin with that.
Okay, so when you say a good investor, are you talking about a good investor partner or just
Yes.
makeup of a good investor?
Well, both, actually.
Okay. All right. Well, I think, and I'm coming more from a commercial angle, I think a good investor is someone that understands the risk, understands the reward, and knows how much work they want to put in, money or capital they want to put into the investment. I think a good investor should know all of those things because surprises are good at Christmas and on your birthday, but they're not good when they're, trying to write checks.
My theory always is, because I've had several investors in my residential land development business. By the way, you were my best investor, and I want to tell you why. And we have the same philosophy: invest, know what you're doing, and then leave you alone.
Right. If you don't have confidence, then you shouldn't invest with that person. I've had a couple of partners, and I tell them in the beginning, I don't like, a lot of phone calls. I don't want a bunch of quarterbacking. I don't want second guessing my decisions. So if that's who they are and that's where their comfort is, we should just not do that together. If you have confidence in me, great. If you can look at my track record and you're comfortable with that, great. If you're not, then, life is short. We should both figure out something else to do.
And I'm sure you, as well as I, have been approached from time to time with people that want to invest, but they don't follow the protocol that you've talked about, number one, and they don't know. My best investors have been people that are experienced in the real estate market and understand, like what you say, what the risks are.
Right.
And that they have confidence in what you're doing. You have a track record, but I think quarterbacking is never a term that I've used, but that's actually the best term.
Yeah. So what makes a good investment is an investment that you're comfortable with and it's performing to your expectations. So if you were expecting an 8% first year and you get an 8%, that's a good investment. If you were expecting a 20%, even if that's unrealistic and you don't get 20, then that's not a good investment for you because even though your expectations were realistic, it didn't perform to what you were thinking.
Can you give us a good example of a good investment? And I, in turn, will give you one that didn't turn out so well.
Okay, I'm going to knock on wood because I haven't personally been involved with an investment that I thought was unsuccessful investment. But I think a good investment is something that meets my timeline
Mm.
and meets my financial expectations. So to me, that's a good investment. Just real estate, not the good that it does for the city or produces warehouses or produces apartments. I'm just talking about, so we're comparing, shake it all down so we can say if we buy a bond, it does this. After tax dollars, it produces X. If we buy a building after tax dollars, which includes all of the incentives like depreciation or interest write-off or all of those things. So we take the bond, it makes X dollars. We do the real estate investment, after tax dollars, it makes Y. You might do an annuity, it pays Z. And then you just look at that because you might not have enough funds to do all three of those things. So you look at them and say, you know what? I'm going to do this. And that's why real estate has some incentives for investing, commercial real estate, interest write-off, i.e. depreciation, because it is more risky. So it's not just putting the money in an annuity and waiting. There's some risk involved. So for that, the government years ago, decades ago, put into place some incentives. So people would develop warehouses, would develop shopping centers. Otherwise, the risk would be too great, and people would say, I'm okay to just invest in a mutual fund.
So, I have a joint venture that is 30 years old. And what I would say to you is that's too old, because during the lifetime of that 30 years, people's personal investor situations change.
Right.
And so one of the things that I think that I always look for is, how long is this investment or this deal going to last? Right. And I'm a residential land developer. And so I want out in 3 to 4 years. And I have been in investments, obviously, that take a much longer when they're larger. And I would say, even though you may all start out as equal partners, life really changes. People get married, people get divorced, investors pass away, then you're dealing with trusts or spouses that may or may not know anything about what you're doing. And then if you're dealing with a public entity or a sub-public entity, then you're dealing with political influences that can affect decision makings and all that sort of thing. The other thing that I would say is you want to be able to respond quickly to changes in the marketplace. And if you have to call a membership meeting or whatever it is, I find that to be challenging. I also find it to be challenging, and I don't think you have this experience, but the spouse always has an opinion in many instances, at least in my world. And you don't, as the general manager or the project manager, you don't have that opportunity to have that contact with the person that is influential in a partner's decision-making process and only gets information peripherally. Right. Yeah, doesn't get all of the information.
Right. And we're talking about investing with someone. We're not talking about you investing without partners. So when you have partners, all of these are issues.
Right.
If you're investing sole, or if you're looking at a warehouse or an apartment building or something, so you're looking at it as an investment with you and other people, or maybe the people that are watching this podcast are thinking of it as investing with, an army buddy or
a family member, which is always dangerous.
Right. So those are issues that you have to think about. But as a sole investor, just a sole investor, just you, whether you take title in your name or an LLC or however you take title, but you're the only investor, then that's a different set of issues. And then you don't have to worry about if the spouse or any of that. Well, you might still have to worry about your spouse, but you don't have to worry about outside influences outside of you.
Well, I'm at this particular point in my life personally, where if I were to take an investor, I want to know if that investor passes away, who will I be dealing with? I think that's really a very, very, and those are really difficult questions to ask someone. But in large investments that are ongoing, I really think that you need to do that. Now, I think another thing that's very interesting is I never, for right or wrong, I never see a partner's financial statement. I do all of that with my lender. Each investor goes to the lender, and the lender will evaluate the financial situation of everyone and tell me, if I'm the general partner, that whether or not everyone meets a basic criteria for being able to participate in that situation. Now, I have had a potential partner who I introduced to a lender to see if he was going to qualify to participate in an investment. And he was given, to my knowledge, forms to fill out and all that sort of thing, a financial statement, and he never returned to the lender. So that's
kind of telling too.
Yeah, that was very, very telling. And that person was not, did not become an investor.
Yeah.
So they're just, I don't think that you necessarily have to share financial statements, but you probably do need a third party to evaluate if you're going to be borrowing a significant sum of money, that everyone is qualified.
Well, and it depends on how you're structuring the ownership entity.
Mm-hmm.
You know, I've got investors that they have their own group. So they know what they're doing. Me personally, I'm always the managing member. I'm the only one that signs on the note. So I don't see anyone else's financials, but I don't invite them to invest with me if I'm not confident that they have the financial ability to at least come in. But so those are just, all of those that's good to know, and it's good information, but it just depends on how you want to structure your investment entity and how your investors. There might be 4 or 5 of you already saying, let's do something together. You don't know what it is, but you're going to do something together. So then probably the next step would be to find a real estate broker, a commercial broker, if that's what you want to invest in, that you have confidence in, that knows the market and can kind of give you ideas. Well, if you're going to do an LLC, these are the issues that you need to think about and address now, because you don't want to make changes a year after closing. And you may not be able to. So,
Well, and of course, you need your consultants. You need the CPA, the lawyer.
That's all part of your team.
Yep, that's exactly right.
Yeah.
And in some instances, you may need an appraiser.
Well, for financing, you're going to have an appraiser.
Yeah.
So, yeah.
And a lender. Yeah. So what's a good investment today in Alaska?
Well, everything's a good investment. And then the flip side is everything's a bad investment. So if you overpay, it doesn't matter if you buy City Hall. It doesn't matter if you buy City Hall. If you overpay, it's a bad investment. Now, maybe time will take care of you. Maybe 30 years from now, you'll get your money back. And so it's kind of a flat line, dead money. But I would say that's a bad investment. So everything has the ability to be good investment or a bad investment. People that I work with, we cannot control the price going out of the investment. So if for whatever reason we need to sell in 5 years or 10 years, and I'm a long-term hold, the market's going to tell us how much we're getting. We don't have control of what the market's going to tell us, what the building is worth or what the property is worth. The only time we have control is going in. We can say, I will pay $1 for that building, but so you buy it for $1, or it's not worth $1. You can control that going in. You cannot control it going out. When you sell, you're at the mercy of the market. I mean, you can ask for more money and you can sit on it, but you won't sell it. So that's know when you have control and take control.
Well, and that certainly applies to me as an investor or general manager in residential land development, which I always look at a short term. I don't want anything more than 3 years. All right. But even within a 3-year period of time, things can change rapidly. COVID.
Oh, yeah.
COVID, right, changed us immediately.
And forever.
24 hours or 3 days, right?
Right.
I mean, I remember when we were shut down.
Yeah.
When this office closed, the city was shut down. I remember that distinctly because I was at loan committee in Los Angeles for a 42-lot subdivision. At the same time that we got shut down with COVID, the price of oil plummeted along with that. But I was fortunate to have a good partner. And I was fortunate to also have 29 lot reservations. And then what happened? So I thought, well,
Did they honor those?
they did. There was only one that did not honor it. But then, and one day you think, well, I'm going bankrupt or this is not going to work out right. And then the next day, all this COVID money started flowing into the economy, right? And interest rates plummeted, mortgage interest rates plummeted. And here we were selling a lot of houses suddenly. Whereas 30 days before that, we thought, well, we're going to be writing a lot of checks here to cover our situation. So we are buffeted by things that we actually have no control over. What looks good one day on paper may be changed almost instantly.
Right. During COVID, I'm involved with the largest RV park in the state of Alaska. And Canada closed the border. So we didn't have any people driving up from the States or anywhere because Canada wouldn't let them cross the border. So essentially, the RV park was empty for 2 or 3 years. And I told all the staff, just don't go anywhere. Your paycheck is secure. We'll just keep doing what we do. And something good will happen. And it all did, thank God. But you just don't know. And you have to have a plan, not for COVID. I never knew what COVID was until then, but you have to have a plan.
I'm not sure we even know today.
No.
Like, oh, it is.
But you have to have a plan for what happens if the stuff hits the fan. And okay, then what do we do?
So the whole idea is not to be over leveraged.
Right.
I think that's the most important thing. And in my world, when I'm looking at a project and I'm going to a lender, what they really want to know is not whether the project is good or bad, but if the project fails, do you have the financial capability to continue to reduce your debt?
Right. Which is why most of us have to sign personally.
Yes.
So,
yes.
And that's what they're looking for. They just want to make sure that they're okay.
Right. But I remember during the crash in the 80s or just before the crash, there was a bank in town who sat in front of me and said, I don't care about the quality of the project or whether the project is appropriate for the market. I only care if the borrower has the money to pay back the loan. And in that instance, that wasn't my project, but he was referring to the market in general.
Right.
And that's how we got a lot of bad projects. Right. Really. Because the lender didn't care whether the project fit the market or not. They only cared if the borrower had the money to repay the project. Well, that's why we had a lot of bankruptcies in residential mortgage development and in vertical construction as well as horizontal.
Yeah. Well, we were putting stuff up as fast as we could because we had just finished the pipeline days. So we came off of a real boom time. And things were just springing up everywhere. People laugh about the blue roof shopping centers, but we had the same issue with residential houses and condos.
Yes.
So we just overbuilt and we just thought it was going to last forever, and it didn't.
And we built some large, beautiful buildings as well, like our library, like our performing arts center, other things. And without thinking about in the future what those maintenance and repair costs were going to be.
Right.
As well.
Project 80s.
Yep.
Yeah, we were rich.
Yes.
We, the city and the state.
Right. So what's our takeaway from all of this? I mean, you and I have been in business for like 40 some years, right? And we lived through all of the ups and downs. And here we are still sitting here, still investing, still talking about real estate.
So the takeaway is this is great fun. And when it's not fun, you'll be sitting here by yourself because I'm going to be doing something else that's fun. But, real estate investing is very dynamic. It's always moving. It's been my experience that everyone is positive. You don't go into an investment with gloom and doom. You go into an investment hopeful that you're going to make this great profit and make a difference to the city and a difference for your family. So everyone is positive and looking forward to even better days. That's addictive. That kind of positive energy is addictive. And I like that. And that's what draws me to real estate.
And I like that you can touch and feel it, right?
Right.
And you can drive by it and say, I did this, or I'm part of this, which is a lot different than buying a stock or a bond,
Right.
you know?
And I think that a healthy portfolio should have everything. I bought my first property when I was 18, just barely 18. I didn't know about stocks. I mean, yeah, I think that's a safe statement. I didn't really know about stocks. Certainly, I wasn't old enough to buy a bond, but I got started in real estate because I was able to leverage into it. I was able to buy it without did owner financing. So at that time, you didn't have to qualify for a loan if you had enough cash for a down payment.
You got that cash selling Christmas cards, didn't you?
Door to door since I was 6 or 7 years old. Yep. Saved it with all the money. And yeah, I've always loved selling. It's great fun.
It is fun. It's personal.
Yeah.
And you get to know people. You know, and almost all of them are good, you know.
Yeah.
They all have stories, you know. I'm fortunate. I don't think I've ever dealt with fraudsters, and we have a lot of fraudsters in the marketplace today, at least on
Everywhere.
my side.
Yeah, everywhere.
On
Yeah.
my side. It is very rewarding.
Yeah.
And fun.
I don't know how you're sending in questions, but if you've got questions about investing or specific questions, somehow channel them to us, and we'll give you our best advice.
All right. So that's it for today, Lottie. You and I have been in the business a very long time.
We're
Colleagues, we're friends, although we have political differences that we're not going to talk about.
No. She's well-meaning, but she's not always right.
And Lottie always thinks she's right, but sometimes she's not. Right.
Which is consistent with me.
Right, exactly. All right. That's it for today before we get in trouble here.
Perfect.
All right. Okay. Thank you.